Welcome to today's Cash Receipt Controls webinar. I am Elizabeth Whitaker, and with me today I have Michael Murray. Today we will be focusing on cash receipt controls that should be in place to control monies as they are received by district employees. But there are some general cash controls that we will take a few minutes to review as well. Why do cash receipt controls matter? The 2016 Report to the Nations on Occupational Fraud and Abuse, issued by the Association of Certified Fraud Examiners, which outlines common fraud issues in organizations, identifies the impact of various schemes across different types of organizations. According to the report, 30% of fraud cases reported occurred in small organizations, which are defined as organizations with fewer than 100 employees. Here we have listed several types of fraud that the report looked at related to cash receipts. The report noted that a common reason cash receipt thefts occur more often in smaller organizations is that smaller organizations had a significantly lower implementation rate of anti-fraud controls than larger organizations. This gap in fraud prevention and detection coverage leaves small organizations extremely susceptible to frauds that can cause significant damage to their limited resources. For example, in the 2016 report, it discussed the percentage of cash receipt thefts that occurred in all organizations based on a review of over 2,000 cases. The report identified skimming in 19.9% of the cases that occurred in small organizations. This percentage is more than double the 8.9% found in larger organizations. Skimming occurs when all or part of an incoming payment is stolen before it is entered into an entity's accounting records. If your controls make sure that amounts received are actually recorded in your records, you can reduce the risk you face as theft of cash after recording in accounting records was found less often, but it still was found in 13.5% of the cases in small organizations and 6.5% in larger ones. Fraudulent refunds or voided transactions were noted in 2 to 4% of the cases reviewed, with little difference between different sized organizations. These types of thefts occur when a person is able to do a refund without separate approval or adequate documentation. They can also be the result of a person voiding a legitimate transaction after the fact because they were able to keep the receipt they should have issued for the transaction and then indicate it was an overring on the system. Both of these situations allow for false entries to be made in the cash register system and cash to be stolen. So you can see why having strong controls over cash receipts is important, because the controls we will cover today, if effectively implemented, can help reduce the risk that these instances of theft, fraudulent acts will occur, no matter what size your district is. Before we get into cash controls, let's take a minute to clarify what we mean by cash. It's not just bills and coins. Cash includes currency on hand, such as change funds and petty cash funds, and cash receipts that are awaiting deposit. When we say cash, we also mean negotiable instruments, such as drafts, checks, warrants, and money orders. Because of the relatively high risk associated with cash transactions, it is important for districts to establish and maintain effective policies and procedures in order to safeguard cash, prevent loss or misuse, provide prompt and intact deposits, and ensure accurate record keeping. Having effective cash controls not only helps safeguard cash, but it also protects employees involved in cash handling from false accusations of misuse.
The general cash controls every district should have in place relate to separating cash handling and record-keeping responsibilities, safeguarding cash, making sure employees who handle cash are bonded, maintaining only authorized bank accounts or for depositing cash receipts, and documenting monthly bank account reconciliations to ensure independent review of deposits. Procedures for all of these cash controls are described in the Uniform System of Financial Records, more commonly called the USFR, which is available on our website. Separation of responsibilities is a very important cash control. The three key types of responsibilities that should be separated are cash handling, which includes receiving cash and preparing checks; record keeping, which involves recording transactions in the accounting records, and authorization, which includes approving cash receipts and expenditure documentation, as well as signing checks for bank accounts. If a person has responsibilities in more than one of these important areas, there's a higher risk for both honest mistakes in processing going unnoticed and uncorrected, as well as the opportunity for the improper use of cash. Districts should ensure they involve more than one person in processing cash and proper separation responsibilities to protect cash and reduce the risk that it will be lost, misused, or stolen.
The next general cash control area is related to safeguarding cash at all times. Cash should be adequately safeguarded by limiting access to it. When cash collections are awaiting deposit, they should be locked in a safe or locking cabinet or drawer. Sometimes a locking cabinet or drawer might be a better option than a safe if other people need to keep things in the safe. Remember, limiting access to cash is not just about locking up the cash, but about truly restricting access to the fewest people possible. The cash should be restricted to only those employees who need access. Districts should also safeguard cash by adequately bonding employees who handle it. Statute requires that employees who handle cash be adequately bonded. The purpose of bonding is to repay the district in the event that a theft or loss occurs. Many districts have obtained universal insurance coverage to address the risks that these statutes were enacted to address. If you are not sure what coverage your district has, it is a good idea to check what coverage it has, what it includes, and ensure that the district would be covered by either bonding or insurance if a theft or loss occurs.
District cash is either held on deposit with the county treasurer or in an authorized bank account. District governing boards may only establish bank accounts allowed by statute. The USFR cash section provides a complete list of authorized bank accounts. In addition, the USFR details which bank accounts can have fees charged against them and which accounts should not pay their own fees. No unauthorized bank accounts should be maintained by the district or in any way be used to hold district monies. The district's tax identification number should not be used to open bank accounts by groups such as parent-teacher organizations or booster clubs. Additionally, authorized bank accounts should only be used for their intended purposes as described in statute and the USFR. To help ensure that accounts are not misused and to avoid unnecessary account fees, inactive bank accounts should be closed immediately. Districts can look for unauthorized accounts opened in their name or tax identification number, either with good or not so good intentions, by contacting area banks for a list of all accounts using the district's tax identification number or for accounts that contain the main part of the district's name.
A final general cash control is reconciling bank accounts. Districts need to ensure that monthly bank reconciliations are prepared for each bank account to confirm the balances in the district's records and on the bank statement are correct. The reconciliation process includes tracing amounts to support, comparing balances between the bank and the district, identifying any differences, investigating and documenting the reasons for any differences, and documenting and making any adjustments necessary. From a cash receipts perspective, the bank reconciliations provide a double check by an independent district employee that amounts recorded as received in the district's records were deposited intact and in a timely manner.
Now that we have looked at a few general cash controls, we'll move on to cash receipt controls, which is our main focus for today. The first two controls listed here are about safeguarding receipts by restrictively endorsing checks, warrants, drafts, and money orders for deposit only to the credit of the district immediately upon receipt, and safeguarding cash immediately in a locking cash drawer or cash box. The remaining controls deal with accounting for the amounts received. These controls include accounting for change funds when issued by an account custodian, documenting who issued the change fund and the employee receiving the change fund before and after each use, preparing and retaining evidence of receipt for each cash payment received. For example, a sequentially numbered and numerically controlled cash receipt form or a cash register receipt to document all cash received. Using daily cash collections reports and summary reports to document total receipts. Depositing monies received intact daily when significant, or at least weekly, meaning every 7 calendar days from when it was received, and retaining records of those deposits. And finally, recording cash receipts in the district's accounting records promptly so that records of cash are always as up to date as possible.
Often receiving cash involves the use of a change fund. Change funds are not the same as petty cash funds. Change funds can be established by a check from the applicable account made payable to the change fund custodian. It should not be made out to cash or left blank when issued. It might sound strange to make a check out to an employee to establish a change fund, but if you think about it, doing that helps to track who was responsible for the change fund. The person the check was made out to is the person responsible for returning that change fund and accounting for it until it is returned. Of course, the change fund custodian won't always have the change fund in their possession, but when they don't have physical control of the change fund, they should have it secured or have documentation of the employee that the change fund was given to, including that person's signature and date when they received the change fund. Change funds may not be established from cash receipts, as it would cause revenues for those cash receipts to be understated, and those cash receipts would not be deposited intact, in total and without alteration. The change fund should only be used for making change and should not be used to make purchases or to cash checks. All money should be returned in full to the account custodian between uses and at the end of the school year. Change funds should be accounted for by the account custodian and the employee receiving the change fund before and after each use. They should be secured when not in use in either a safe or a locking cabinet. Before we look at how to document amounts received, let's take a minute to review some of the types of different cash collections you may have at your district. Bookstore sales, student activities, food service sales, and gate receipts are the most common types of receipts for districts. But many districts will also have gift and donation receipts, including tax credit donation receipts. The last two types of receipts listed here, tuition and fees for classes and community activities, and proceeds from the sale or lease of district property, may be less common for smaller districts, but in some districts could be fairly significant. Given the different ways these monies are generated, it makes sense that districts would use different ways to document them when collected.
The methods your district chooses to document collections might vary depending on the activity, location, and people participating in the process. Some ways to document receipts include ringing sales up in a cash register, issuing pre-numbered receipts, selling tickets, or conducting inventory counts. For example, bookstore sales are probably best documented using a cash register. Student activity sales might involve issuing tickets or conducting inventory counts. Food service sales probably use a cash register. Gate receipts would involve issuing tickets. Gifts and donation collections might be best documented using pre-numbered receipts. Tuition and fees for classes and community activities and proceeds from the sale or lease of district property could both involve either a cash register or a pre-numbered receipt. The most important thing to remember is that no matter what method your district uses, you should always document each cash receipt. So let's look at each way of documenting receipts in more detail. The first option available for documenting cash collections is to use a cash register. The register can be simple or more complex and connected to a computerized record system. Using a cash register to document cash collections is a common method when dealing with bookstore operations and food service sales. If you aren't using a cash register for documenting sales because of the expense in buying one, you should probably look at prices again, as cash registers are not expensive and their ability to track sales at the same time as issuing receipts might make the minimal expense a real bargain. When using a cash register, it is important to ensure that all transactions such as sales, fees, or donation collections are run through the register. That way, register tapes can be totaled out at the end of the day and used to reconcile the cash collected to actual sales and other amounts collected. One way to help make sure that the cash register is used for all transactions is to post a notice that everyone should get a receipt or get $1. Someone other than the cashier who is accepting the cash and ringing up the sales should have control over making any adjustments in the register and should be the one able to total the register at the end of the day to reconcile sales to cash collected.
If a cash register is not available or cash collections are less frequent than they would be in a bookstore, a district could choose to document cash collections through use of a multi-copy receipt book or other type of pre-numbered receipt form. All receipts must be pre-numbered and issued in sequential order. This helps to ensure that all cash receipts can be accounted for and accurately recorded in the accounting records. In some other cases, like a school dance or athletic event, districts can use tickets to document sales. Issuing a ticket is like issuing a receipt when the price for each ticket is the same. So a ticket must be issued for every sale. If different prices are used for, say, adult or student admission to the football game, different tickets should be used for different prices, red and blue, for example. Total sales can then easily be calculated based on the beginning and ending ticket numbers for each type of ticket sold. Just like receipts, tickets must be pre-numbered and issued sequentially. Tickets could also be used for concession sales, red tickets issued for items which cost $1 and blue tickets issued for items which cost $2. Both receipt books and ticket rolls should be controlled by someone not collecting cash. They should be checked out before and after the sale and returned after to allow reconciliation of sales to cash collected. The final method we will discuss for documenting cash collections is using an inventory count. With this method, you take a count of items before and after the sale to document sales if using receipts is not practical. An example of this type of sale would be a club selling nachos as a fundraiser. You could use tickets and have one person selling the tickets for the nachos and separate people filling those orders when a ticket is presented to them to prove payment was received. But that adds an extra step, and that may not be practical with the number of hungry high school students waiting. So instead, sales could be tracked by counting the number of bowls used for nachos on hand before and after the sale to determine how many were sold. The inventory count should be done by someone not involved in selling the nachos. For example, if 200 bowls were available before the sale and afterwards the independent person counts only 45 remaining bowls, the expected cash collections would be 155 times the sale price of the nachos. Maybe that was $2 in the sale, so $310 should have been collected.
In addition to issuing receipts or tickets to document individual sales and collections, districts should use summary reports to document total sales and cash collections for each type of activity that generates cash collections. The USFR provides several sample forms to document sales and cash collections. Districts can use these forms as is or modify them to meet their needs. Let's take a look at a couple of those forms. An activity report is used to record ticket sales and reconcile sales to cash received. For the Auxiliary Operations Fund, this might include ticket sales at athletic events. For Student Activities Fund, this might include ticket sales for school plays or dances. The top part of the report details information about the event and the change fund receipt number if a new change fund was issued for the cash collections. The ticket report section provides information on the first and last ticket numbers, the total number of tickets sold, and the sales price of each ticket sold. The report also includes a cash count area in the lower left to record the amount of money by denomination. The change fund is subtracted from the total to arrive at total deposit. The final main area of the form is the reconciliation section that compares the amount of the total deposit to the amount of sales based on tickets sold to determine if there is any cash overage or shortage. The amount of cash over or short should be recorded and explained. Reasons for differences may include spoiled tickets not being accounted for, miscalculations on the report related to the number sold or cash total, or actual shortages or overages. Signature blocks at the bottom acknowledge the issuance of tickets and change funds and a return of the change fund, unused tickets, and cash collections, as well as a review of the reconciliation of sales to cash.
A daily sales report can be used to document sales from a cash register or receipt book and the related cash collections. The top portion of the report, again, has information on the event and change fund. And again, this report includes a cash count area to record the amount of money by denomination. The change fund is subtracted from the total to arrive at net collections. On the bottom left, if a cash register is used, the cash register totals can be run and recorded on the form to show total sales. When using a cash register, you should record the ID number from the total tape and then attach that total tape to the form as support for the sales amount recorded on the form. On the bottom right, if a receipt book is used, the receipt book summary provides for an accounting of the receipts used for the event, listing beginning and ending receipt numbers in the receipt book, as well as the last receipt number used for the event, which can be used to determine quantity sold. The price of each item should also be indicated. You could use a modified version of this report to indicate inventory counts before and after the sale instead of receipt numbers issued to calculate total sales. The signature blocks at the bottom acknowledge the issuance of receipts and change funds and the return of the change fund, receipts, and cash collections, as well as review of the reconciliation of sales to cash collected. It is important to remember that the same controls that secured cash while it was being collected need to be followed all the way until the cash is deposited. That means that whenever monies change hands, the person receiving the monies needs to acknowledge in writing how much was received. So that means counting monies that are brought to you right away and giving the person that brought them a receipt for the monies or a copy of the report that they gave you with the monies that has your initials and date indicating you received the monies. For example, if you are a bookstore manager and you receive a sales report from a cashier for the bookstore sales that day, it should indicate the cash collected is counted by the cashier, and you should recount the monies and document in writing that you agree with the cashier's count or that you don't right then. If you don't count the monies then, and later the count is short of what the cashier said it was, how can you say for sure what amount was there when it was returned to you? Maybe it was short, or maybe someone had access to the cash at some point after that, and some monies were removed. The same goes for receiving a sales report from the student store sponsor or an activity report for dance ticket sales at lunch that day. Anytime one person gives custody of money to someone else, the amount given and received should be documented.
Because there are often more than one activity or sales report turned into a central location, like a bookstore on a given day, the USFR has a sample daily cash collection summary form that can be used to summarize the cash collections from all reports for that day. In Part 1, the preparer should summarize the information from each activity or collection report, including the amounts. In Part 2, a total cash count should be prepared. In Part 3, the amounts from Parts 1 and 2 should be reconciled and all overages or shortage amounts should be explained. The form also includes a signature block indicating who prepared the summary, like the bookstore manager, and who reviewed it, like a district accounting clerk, and when the summary was submitted with validated deposit slips to be recorded in the district's records. Sometimes daily cash collections will be enough to warrant depositing that day based on the district's policy, but other times deposits won't be required daily, just weekly, meaning every 7 calendar days from when the deposit was received. Revenues received should be deposited intact with the county treasurer or into a bank account. Intact means that you don't use cash collections to make change for someone or to cash a check for someone. You don't create a change fund out of cash collections, and you don't make purchases out of cash collections. All you do is safeguard the collections and then deposit them. Districts must retain evidence from either the county treasurer's office or the bank indicating the amounts and date of deposit. If you deposit monies into clearing bank accounts, you need to remit those monies to the county treasurer at least monthly. The district should retain supporting documentation, such as a validated treasurer's receipt or revenue posting report to document this remittance.
Finally, revenue should be recorded in the district's accounting records by fund and object code. To do that, first the sales or summary report should be reviewed to determine the revenue amounts are correct and to determine the correct coding for the revenue in the accounting records. If any subsidiary records of revenues are maintained, they should also be updated. Student activity receipts should be credited to the appropriate clubs, and if you use a separate record to track other detail on revenues, such as donations by type of donor restriction, those records should be updated as needed. As a final step or a final check in recording revenues, it is important that revenue reports are given back to department heads and club leaders in order for them to ensure their balances are correct and the receipt process is complete. Thank you so much for joining us today for this webinar. Be sure to check out our website, www.azauditor.gov, for some additional resources, including the USFR, various frequently asked questions, some videos on cash controls, and other webinars that we have recorded. If you want to know more about this topic, please refer to these resources on our website. And if you have any questions, please feel free to contact us by phone or email at the number and the website indicated on the screen. Thank you again.